Interest rates are up, and I'm constantly getting the question, when are they going to come back down? Obviously, mortgage payments are going up pretty substantially really in the past 6 months. I think we've gone up about 1.5% in general on interest rates in the past 6 months. And of course, especially on the house prices that we see today, higher than we've ever seen before in most markets, that makes mortgage payments quite high, sometimes surprisingly high. But here's the thing that I want to make sure that everyone understands. I'm going to share my screen here and help you take a look and see that, we have really gotten accustomed to interest rates that are, I don't want to say not realistic, but not rates that we should really be thinking are normal. So if we take a look here at, this is the Freddie Mac history of primary mortgage market survey since 1971. So this gives us an opportunity to look back all the way to 1971. This is where we are today. This is saying that we're in, this is a little bit dated. So when it says January 6th, and it says that 30-year fixed mortgage is at 3.22, that's not where we are today. Again, that was January, and we've just seen a dramatic increase in the past couple of months. So we're really looking at in the low fours today for a well-qualified client with no discount points or anything like that. So that's about where we are. Now, people are going to say, oh my gosh, in the fours, but I've been doing this for 20 years. And I remember when we were having a party in our offices because we had gotten to 7 and then again celebrated 6 and then 5 and then 4. 3 was just unbelievable. And when you're in the 2s, it's almost more unsustainable. There's not the return that is needed by the investment community. It seems like there's just not that return there unless some other rates are extremely low as well, which we've seen because of trying to fight the effects of COVID and the lockdowns and things like that. But what I want to make sure everyone understands is that interest rates in the 4s are amazingly low. Interest rates in the 5s are amazingly low. In the 6s are very low. So when you take a look at the history here, and the blue line is the one you want to pay attention to, you'll see that it says 30-year FRM, which is fixed rate mortgage. So you see there September 16th to 21, we're looking at 2.8. I mean, and again, we're probably in the low 4s today, about a 1.5% increase in the last six to 8 months. But take a look at the history here. I'm going to move my cursor. Take a look at those dates. 2006, where were we? 5.57. 2000, let's say 1998, where were we? 6.99. Okay, so think about that. 6.99, that's going to be for an excellent qualified client, 7% basically for a well-qualified client in 1998. That's not like 100 years ago. This is fairly current. And look at when we were trying to fight the inflation that was taking place in the 70s. There was massive inflation in the 70s. So we had to raise interest rates. And look at here, interest rate on a regular 30-year fixed mortgage, the average in the United States was 18.44%. So the reason I want to point this out is that if someone says, well, I'm going to wait for interest rates to come down, first of all, like, who says they're going to come down? I mean, who says they're going to come down? And they don't have to come down. Rates are very low right now, extremely low. So we just have to understand that we're very accustomed to hearing advertising that says 1.99 or 2% or 2.5%. So I understand. I don't want to not pay attention to the fact that the mortgage payments are difficult right now because house prices are high. Interest rates have been low for a very long time. So it somewhat has absorbed that low interest rate into the prices of houses. So the question of, are house prices going to come down? That's a whole nother topic that I'll bring up. The answer, in my opinion, is maybe not. So we have to talk a little bit more about that. But I want to point out that if you're thinking about interest rates, if interest rates are part of the equation of what you're looking at today, whether you're refinancing, purchasing, even selling, people need to pay attention to this. But this is a chart that you can go find. Just type in, what do I have here? Freddie Mac average interest rates, and it's going to come up. And you can see that this goes back to 1971. This is the real deal, guys. These are the real interest rates on 30-year fixed mortgages over time. So the fact that we're not in a 2 or a 3% range doesn't mean that the government needs to step in and push these rates down because we're so high. That's what I hear. We're so high and we're so low. So unfortunately, that is the fact. Just want to make sure that everyone has a little bit of perspective that the average, I always say the average interest rate, a normal interest rate for a home loan, a 30-year fixed home loan for a very well-qualified client, you're really looking at probably between 6.5% and 7.5%. So we're not even normal yet. We're tremendously low. So keep that in mind when you're thinking about the interest rate equation and the decisions that you're looking to make. But I wanted to make sure to point that out. Let me know if you have any questions. You can always leave a comment below. Make sure that you subscribe and share because there's more information coming out. We'll start talking about what we think is going to happen with house prices and why we have these different perspectives. And we'll probably bring on some other alternative perspectives to go through that. So make sure that you subscribe and share. Have a great day.